Gaurav, I think we can start. We have 23, 24 participants.
Yes.
So, good afternoon, everyone. Welcome to our second session of weekly knowledge updates. So, this session we have started recently, just last week only, wherein every Saturday at 12 p.m. we will be meeting every week and we will be discussing some recent important updates which have come in the last week, and then we will have an open query session wherein we have already circulated a Google form link. So we have received some of the queries in our Google form, as well as this is a live open query session. So if any of the participants wants to ask any question regarding GST or customs, so after we discuss the weekly updates, they can ask after the session, they can ask those queries to us. So, Gaurav, I think we should start.
Yes. So we will be having this session in the way that first we will discuss recent update, and it will cover recent High Court's judgment and any other updates related to GST portal or GST laws. So let me start with the recent case laws. And the case law came from Gujarat High Court regarding the limitation period. So basically, under GST law, it is prescribed that if there is any order, so after that you have to within 3 months you have to file an appeal. And department has the power that they may condone 1 month further. If you can't file the appeal within that time, then the department will reject your order. So there are certain cases where the taxpayer or the professional directly went to the high court once the appellate authority rejected the case, and the now high court is taking the view that since it is a statutory time limit, so even high court can't override the statutory time limit. Then the same thing has been happened in the two recently case law of Gujarat High Court, naming Ravi Plumbing and Construction, and another one is Rajneesh Industry Bhate, State of Gujarat. So department has strictly said that High Court has not power beyond the beyond the Article 226 of the Constitution, which strictly says that where there is a statutory time limit, then it can't be condoned by the anyone. So this was the first update that has been issued during the week, and we have covered.
So I
Now the
think this is a very important judgment because in past 1 year, I think we have had a lot of contradicting judgments.
Yes.
So we have one or two judgments of Punjab and Haryana High Court wherein it was held that limitation period can apply, limitation act can apply even in cases of GST appeals, even though earlier it was a well settled principle that when you have a specific statute, so
Yes.
when you have a complete CGST Act, and within CGST Act we have complete provisions regarding filing of appeals and disposal of appeals. So CGST Act, CGST law should prevail over the General Limitation Act. That was the general understanding. But Punjab and Haryana High Court held that still then Limitation Act can apply, and Limitation Act provides that in case of for any reasonable for any good reason, delay can be condoned even beyond the statutory period. So, basis that they said that if there is a good reason, the officer can condone delay even beyond the statutory period of 3 plus 1 month. So this becomes very important to note because now we have different contradicting judgment of various high courts, and
Yes.
Supreme Court till now Supreme Court has not given any authoritative judgment on appeal filing within GST. We have some judgments on some other laws, but within GST there is no final judgment of Supreme Court. So I think till the time matter is finally settled by Supreme Court, these contradicting high court judgments are going to create some issues. And similar problems are going to come up in other statutory preconditions also, like pre-deposit.
Yes.
So for pre-deposit, although we have one judgment of Supreme Court wherein they have clearly held that High Court also does not have the power to reduce or waive the pre-deposit. But how binding is that going to be in GST law? And whether the same ground which is taken for statutory time limit for appeal, same ground be taken and to say that High Court has the power at least to waive the pre-deposit for in extraordinary cases. So in normally cases, High Court also does not entertain the ground. But the question is whether in extraordinary cases pre-deposit can be reduced or waived. So any kind of precondition for filing appeal, whether that can be uh, waived by the High Court when that has been specially given in CDST law, that is going to be a very major question in all the future litigation.
Now, the next important case is related to arrest or bail regarding there was a taxpayer and the case was more than case involved more than 5 crore amount of tax or in tax. So there is a provision under the GST law that if the amount exceeds 5 crore, then the department may arrest subject to certain condition. So, in general, every taxpayer come to the professional or the advocates and they ask that whether we can file anticipatory bail. So, one of the recent judgment came from Rajasthan High Court, where Rajasthan High Court has received anticipatory bail from Premchand Jain and Data Jain versus High Court, Rajasthan High Court, and the High Court has passed the order that since the matter is related to the higher tax amount and its department view, so we can't, its department's heavily money is involved there, so we can't in a blanket way provide anticipatory bail to anyone. So there, in the particular case, there were two person who has gone for the anticipatory bail. One was the main offender, and the another was his son who were helping them. So High Court has passed the order that the main accused can't be allowed anticipatory bail, but for the person who has helped them, the High Court has passed that the particular amount will be deposited by him, and they can be allowed for the anticipatory bail. So for us, it's very important to understand that it can't be that blanket approval if we are taxing involved if tax is involved more than 5 CR, so let just go with the High Court and take anticipatory bail. So High Court is not allowing that on blanket basis. So very we have to take care the case very carefully.
I think normally also whenever we see any kind of criminal matters and especially bail within those criminal matters, so bail is a very, very fact specific issue.
Yeah.
So in most of the cases, you will not find general principles are there, but most of the judgments you find they will be fact specific because ultimately when you go to a high court for a bail or even district court or supreme court, so they look at the facts and they then they give their judgments rather than blindly following the general principles which have been laid down. So some general principles are followed, but by and large, they look at the facts of each case.
Mm.
Anticipatory bail, see, at a ground level, practically, anticipatory bail is very difficult to get. Even in normal matters, also it is difficult. In GST matters, it is even more difficult because when you are going for anticipatory bail, normally you do not have any document to show that you are going to be arrested
Yeah.
because you do not have any arrest warrant till that time, usually. You do not have any arrest warrant, you do not have show cause notices are usually not issued by that time. They are usually issued after the arrest is made.
Yeah.
So only summons, either summons is there, the recorded statement is there, which also assessee does not have the copy of that recorded statement till the time that statement is given as a annexure in the show cause notice. So in most of these cases, assessee does not have enough documents to prove that there is a genuine risk of being arrested. So generally, anticipatory bails are rejected by courts for this reason. But this one observation, this one conclusion by High Court is very, very significant. That any co-accused, so for co-accused at least, it is a significant relief. So main accused, they will go factor specific. But any person who is named as person who is abetting those main accused, so they should be given lenient treatment. That is a very significant observation by the High Court. And I think we had one judgment in case of Radhika Agarwal also by Honorable Supreme Court last year only. So there also for anticipatory bail, it was held that the general principle and general jurisprudence will apply. So that means even without FIR, if there is a reasonable apprehension of being arrested, if taxpayer has a reasonable apprehension and he can prove that reasonable apprehension, then considering the merit of the case, the High Court the courts can grant a bail merely this reason that FIR has not been issued should not be the reason to deny anticipatory bail. Because, friends, we have to understand there is a difference in anticipatory bail and regular bail. Regular bail is applied when person has already been arrested. Anticipatory bail is applied when the taxpayer is anticipating that he will get arrested. So to apply for anticipatory bail, first of all, the taxpayer has to prove that there is a reasonable suspicion, reasonable chance that he will get arrested. So proving that practically becomes very difficult. So there, that judgment of Radhika Agarwal will help a lot because they have at least removed one prerequisite of issuance of FIR. So they have that even if FIR is not issued, that should not be seen as a reason for not giving anticipatory bail.
Yeah.
And practically what happens is if you go for anticipatory bail and your anticipatory bail gets rejected, then even getting regular bail becomes very difficult. So in a lot of cases, we have seen that where taxpayer has gone for anticipatory bail, that has been rejected. Thereafter, the department has arrested the taxpayer because now the department knows that getting regular bail will also be more difficult because there on record you have a rejection order for anticipatory bail. So all
Yes.
those things have to be keep in mind when any of your clients gets arrested. So all those practical challenges and the legal principles, both things have to be kept in mind.
Yes. Now we are moving for next case. Next case is related to it's a simple kind of appeal case where the taxpayer has there where there is the difference between the GSTR1 and GSTR3B, and the taxpayer has corrected the difference through GSTR9. But the department had issued the order against the taxpayer. They file an appeal before the appellate authority, and apply and also
Gaurav,
the
I think Samir Chaudhary has raised his hand. So, Samir ji, if you have any query regarding the case law we are discussing, we can take that up right now. If you have any other query that we can take up after the session is concluded. So, just let us know whether the query is related to the case law which we are discussing.
Respected sir, I want to know the full detail of the Radhika case.
So Radhika Agarwal case, that itself will take 1 hour because that was a very significant case. It has basically we all the arrest various judgments in taxation law which we had upon arrest, search, seizure. So Radhika Agarwal has comprehensively dealt with a lot of those issues. So in that we will keep a separate session for discussing Radhika Agarwal. That session itself will take 1 hour only for discussing Radhika Agarwal.
you may share the judgment that they can also refer them. Samir Chaudhary can also refer them the judgment.
We can share our office update. So when the judgment of Radhika Agarwal came, we prepared our office update. So it has all the key observation of Radhika Agarwal judgment that is given in our update. So we will share the link of that update in the WhatsApp group. Ria, please make a note of it.
Mohitji, similarly, other case laws, whatever we discussed, that also either you can share it in the WhatsApp group or to the mail so that.
Mm. Okay, okay, ma'am.
So we were discussing about the recent case law regarding there are two important things that has been dealt with the judgment. The judgment came from Calcutta High Court in the case of the Ilyas Sheikh versus CGST. Okay, the case was basic that there was a difference between the GSTR1 and GSTR3B. So taxpayer has corrected the difference through GSTR9. Okay, now in between the department has issued the order against the taxpayer. The taxpayer filed the appeal before the appellate authority. And the taxpayer also submitted the CA certificate. Here, the important point is that the taxpayer has submitted CA certificate, but that certificate doesn't include any UDIN of the CA. Okay, so department has taken that thing and passed the order. I mean, appellate authority passed the order against the taxpayer, mentioning that the CA certificate was there, but there was no any UDIN to the High Court, Calcutta High Court, and the taxpayer submitted before the court that, sir, the difference has been already corrected to from GST 9, and even CS certificates were provided, and the department has appellate authority has raised that the CA certificate doesn't contain any UDIN. I have also submitted the updated UDIN, but department has rejected. So High Court has mentioned that the case was in the favor of the taxpayer, and High Court has mentioned that the appellate authority should consider the recent UDIN. But what are the key takeaways for us, that if we are submitting any documents before the appellate authority, we must take care that the documents should be proper, that the documents should not have any basic kind of missing information, so that it will come against the taxpayer or come against the client. So that is the judgment that has been passed by the Calcutta High Court.
And this is again a very even though no important legal principle were discussed in the judgment, but one important aspect which was discussed is from both taxpayer side as well as revenue side is, when as taxpayer we are submitting certain documents, so we have to give complete documents. So if a CA certificate is given but there is no UTIN, so as per ICI, that document does not have any legal validity whatsoever.
Yeah.
So any document which you are submitting, we have to ensure the authenticity and the legal prerequisite.
Yeah.
So if it is required to be signed by a person, so if let's say we are giving some invoice that is required to be signed by authorized signatory of a taxpayer, so that should be signed. If a CA certificate is being given, that should be signed and UDIN should be generated. So all these requisites has to be kept in mind by the taxpayer. It is not responsibility of the department. At the same
Like
time,
sometimes we submit,
yes.
yes, like sometimes we submit declaration of the taxpayer, but there was no seal, common seal of the taxpayer, no, not on the letterhead of the taxpayer. So department may reject it, and it will be very difficult for the taxpayer in that case. Sometimes it will not be cost friendly to go before the High Court for every basic kind of thing. So we must take care that whatever documents we are submitting before the appellate authority, it should be conclusive, it should be proper, it should have all the basic details or basic important thing in the documents or the evidences.
And at the same time, if that defect is rectified by the assessee, so that in this case, like the CA certificate without Goodin was given at initial proceeding, but at the time of appeal, the taxpayer gave the correct CA certificate with UDIN. So practically, we have seen in a lot many cases that sometimes the departmental authorities at the time of first appeal, they usually affirm the order in original without giving too many thought and without examining the new documents given by assessee at the time of appeal. So that approach should also not be taken by department. So all the documents which are given at the time of filing appeal, they should also be carefully looked at by the department. And if any defect was there in the document of the assessee at the time of original reply to show cause notice or even reply given before show cause notice, and that defect in documents has been rectified, so all those things should be duly considered by the appellate authority while giving its order.
Yes. So these are the case laws which are issued in between the weeks, the last session and the current session. There are certain updates, basic updates related to GST portal and GST. One of the important updates is relating to the flexible ITC utilization. Means earlier there was a law or there was a mechanism on the portal also, that first you have to set up your liability.
सर सॉरी सर सर थोड़ा बैकग्राउंड में म्यूजिक आ रहा है किसका पे बहुत जगह देना प्लीज पार्टिसिपेंट
Background.
म्यूट
Okay.
Maybe all the participants are muted as far as I can see. Only me and Gaurav are unmuted. Is all the other participants are also hearing the background music?
नो
Also, I think there seems to be some issue at your end.
Yes.
थैंक यू सर थैंक यू
Yes. So we were discussing about the ITC cross utilization. So earlier there was a mechanism. There was a mechanism. Even it is law that first you have to set up your IGST, and after that, if you have to go for CGST, then only you can go for the SGST. But now the department has, earlier in the last session also we have discussed about this, and now the department had issued an advisory that now CGST and SGST can be utilized in any manner. So there is no restriction that first you have to utilize CGST, then only you will use the IGST. So now the taxpayer can use in any way, but it will be applicable from Feb 2026.
So, think we also discussed because the initial advisory was issued in January end. So, in last session also we discussed in detail regarding this advisory. So, one important issue which I also highlighted in last week is that even though they have issued this advisory, where they are basically saying is if you have IGST liability and you have both CGST and SGST credit, you have exhausted IGST credit. Now you have both CGST and SGST credit and IGST liability. So you can use any credit in any manner. Earlier, you had to utilize CGST credit first, then SGST credit. So even though in advisory they have said that you can use the ITC in any manner, but if you see section 49 subsection 5 proviso, so as per that legally you have to utilize CGST credit first. So in my view, till the time section 49 is not amended, even if GST portal is allowing you to do something, till the time law is not amended, you cannot do so. If you're doing that, then because GST is a self-assessment law, so if you're doing that, then you are in violation of law. Tomorrow you cannot take a standard GST portal itself allowed. That is not a valid ground to violate the provisions. That can help with establishing that there was no malified intent, but still you have to follow the law.
Yeah, same kind of thing is happening in multiple way. Like when we are filing GST or one, the portal doesn't take late fees. But when the assessment is going on, the department issue that you have to pay interest. So you have to pay late fee on the late filing of GST or one. So either portal is not taking directly any late fee, but we have to pay that. We can't say that portal is not taken, then we will not pay.
In GST, we have two different kind of laws. One is the law which is given in CGST Act, and one is the law which is made by GST portal.
Yes.
So I think that practically is a big challenge, but yes, taxpayers have to keep in mind that ultimately what is given in CGST Act and corresponding rules notifications will prevail. Just because GST portal is allowing you to do something which is otherwise not allowed, that should not be a ground to violate the provisions of CGST Act.
Yes, yes. Moving to the next update. The next update is kind of updation in the IMS form that the department has also inserted a tab regarding the rejected credit notes and the liability to be added back in 3B. This tab has been inserted. So now if you are issuing any credit note and the taxpayer had not accepted the same, that will reflect on IMS tab also. So it kinds of upgraded in the form of the IMS. So now you can check whatever credit note has been rejected by the counterparty. So these are the updates that has been issued or that has been mentioned in the last upcoming week from last session till today's session. Now we will move for the next part of the our session, that will be the query session. So if you all have any kind of query, if you have submitted that, we will also take, and if you have any kind of query, and then you can also ask the same. I think there is a network problem. Just 1 minute.
May I?
Yeah,
Rajalakshmi.
please.
Yeah. See, this is a case with reference to 74 notice.
Okay.
Okay. Um, the central government has issued a summon, and meanwhile, before they conclude, related to Rule 42 reversal for a bulk period of 5 years. Okay, and before they conclude, state also has started issuing a notices, and the state also has passed an order up to 21-22, and there were some interest was liable to be paid for reversal of ITC. which up to 3 years they went before 34 under 128 for a waiver of interest.
Yes.
And for the last year, 2021 and 21-22, the interest has been remitted by the client.
Okay.
Now, the central again has come back and issued a 74 notice, and then they passed an order confirming that the total liability, that is the demand, which are required to be reversed, and then they have appropriated whatever has been done in DRC 03 as well as in the 3B.
Okay.
Okay, let's say that 7 crore was the total demand payable, of which 6.5 crore the client has already remitted.
Yes.
So in the detailed report, the central CG fellows are saying that they are appropriating the 6.5 crore, but in the summary report, they raise a demand for 7 crore because they wanted to issue 100% penalty. They wanted to levy 100% penalty because the portal doesn't allow them to disproportionately levy a penalty under the tax amount. Now, the query I have is two query. One is whether the interest what has been, a waiver has been obtained under 128 is valid or not by the state authorities. The second one is whether this 100% penalty levied, because all the demands, that is reversal has been made before 74 notice. So is it right from their point to raise a demand of 100% penalty? These are the two questions I have.
Yeah, so first of all, regarding the 128A, waiver of the interest we have been waived. So since it has already been waived, so department can't levy again the same. Even
Yeah.
like there are two things. The department at the education level, they are not covering so many things and department ignore it. But for sure, when the case will go further, like if you go for the appeal, and if appellate is not listened, then the High Court for sure will allow you the benefit of the 128 because it's a law. It's not like if 73 order has already been issued and if you have already paid the tax earlier and you have availed the benefit for the particular financial year like 17, 18 to 19, 20, then the department can't again reinitiate the same case and take interest or even penalty. Since the tax has already been cleared, then only you have taken the benefit of the 128A. If
Yes.
tax has not been paid, then the 128A benefit were not allowed by the state authority or the department. So first of all, the interest thing for the interest point, you don't have to pay because it has already been waived. Now the second point is regarding the 74 penalty. So if tax has already been paid before the issuing of the order, then the department must have to correct the thing.
Before issue of
Department must
SCL.
even SCS, then
Yeah.
department the notice is void because the tax was not there. And the department has issued the notice. Even under the law, there is provision that if the 74 notice has been issued and you pay the tax earlier, then the 100% penalty will not be applicable in your case. So if department is taking this with is totally hard and you must have to fight it. And either if appellate authority is listening your point, will listen your point, then for sure they will reduce the penalty because the tax was not there. And if the appellate authority is also not allowing you in your favor, then for sure under the High Court there are so many points in your favor. First, you have already tax paid earlier. Second, you have availed the amnesty scheme and you have the order copy. Third, the tax was not there and the department has issued 74. So all that ground will suffer. And the fourth point, that say on the same point, two authority are issuing the order. So when the SGST has processed and SGST has passed the order on particular same matter, then the another CGST authority can't issue the order on the same point, except if there are certain other things they can pass. But on the same point, both the department can't can't have a separate kind of adjudication. So
No, the central government is saying when the 65 notice has not been closed, the state doesn't have the power to waive the interest.
no. So, yeah, under the GST, it's provision if a state authority is passing anything that it will be mutatis mutandis applicable to the center also. So if they
Yes.
if they have allowed you and a benefit, a given benefit under 128A, then it can't be the case. So it's kind of add or notice or order. You must have to fight before the appellate authority, and either even appellate authority will pass the order in favor of you. If they don't, then High Court will be for sure passing in your favor.
No, what is the best course? Whether it is a writ or appeal, which is the best course of action for this?
If since in your case tax has already been paid, so there is no kind of pre-deposit kind of issue with you.
So
You don't.
better to go for an appeal.
Yeah, first you go for the appeal because you don't have to pre-deposit anything. You
Correct, correct.
just have to file an appeal, and if and because if you directly go to the High Court are issuing order in a way that you first take the benefit of the statutory remedy. So they will again into the appellate authority, and you don't have there is no any kind of money involved because no pre-deposit is required. So you
Correct.
must go for the appeal, and after that, if the appellate authority is not allowing you, then you must go for the High Court.
Okay. Thank you.
Any other query by any participant? I'm not able to turn on my video due to some technical issues. Apologies to everyone.
Gauravji, can I ask?
Yes, please.
Yes, please.
Gauravji, bank issues a tax invoice regarding the bank charges.
Okay.
Later on, bank gives us a commercial credit note for the taxable value only. Whether we can take the benefit of ITC or we have to reverse the ITC.
So bank has only reversed the taxable value. They have not reversed your ITC proportion. You are saying.
Yes, yes.
So, see, if the bank has issued a credit note for the whole amount, we have to see whether the taxpayer has actually received any service or not. Because if, let's say, a tax invoice was issued for 100 rupees and a commercial credit note is raised for 50 rupees or 80 rupees for the partial amount, then there is no requirement to reversal ITC as long as a complete amount of GST is paid by a recipient to the supplier. But in a case where credit note has been issued for the complete 100% amount, so the first question which is to be asked is whether there was any service rendered at all. In most of the cases, it only happens when the service itself has not been rendered. So if there was no service given, then ITC cannot be taken because one of the precondition in section 16.2 is you have to receive the service. So if service itself is not provided, then ITC cannot be taken.
Yes, we can say service is not received because bank has given us a waiver.
Uh, yeah, so see, if bank has not charged us anything, then there is no service at all.
Yes, if bank issued a commercial credit note for the taxable value only, we can take the ITC. We did not reverse the ITC.
No, we have not received the service itself, then ITC cannot be availed. So when there is a commercial credit note for partial amount, then it is a different case. If the tax invoice was issued for 100 rupees and commercial credit note was raised for 80 rupees, but the taxpayer has received the service, then we can still argue that ITC is available on complete 100 rupees.
But initially, customer has received the services. That's why bank deduct the bank charges and issues a tax invoice. But later on, we request the bank to reverse these bank charges because we have a long relationship. Bank gives us a commercial note for the credit taxable value only. Then we can say, no, we have take the services from the bank.
In my view, it is still difficult because to be called a service, there has to be a consideration. When the bank has ultimately given a credit note, that means bank has not taken any consideration. So it will not qualify as the definition of supply under Section 7. But this is
I
my view.
think
Gaurav, you can also give your view.
I, I think he is asking that if the bank has not reversed the tax and bank has not given the credit note for tax portion, that it can be the case of the financial or commercial credit note. So when the bank is kind of transaction that they had provided the ITC, now they are allowing them the waiver of the interest portion open where of the charge portion. So it can be treated whether it can be treated as commercial credit note, financial credit note where tax is not involved, only the benefit has been passed on. So in that case, it will be technical that whether if we consider it a technical or commercial credit note, then the ITC portion is against the tax invoice. So we can take it, but for commercial financial credit note, there is no need for reversal of tax. So what are your point of view in that perspective, Mohit bhai?
In my view, see this that is acceptable when there is a credit note for the partial amount, because there is still a service or goods which is received. We also have the appellate advance ruling of MRF in that case. But when the credit note has been issued for the complete 100% amount, then there is no service itself.
Yes.
Even if, like it was mentioned that service was actually rendered, but later on bank waived the amount, still I would say there was no service because there was no consideration. As per Section 7, to be called as a supplier, there should be an activity for the consideration. So ultimately, if bank is not getting a consideration for the basic amount, then there is no supply of service at all. So still in this case,
So
if there was a partial amount credit note, then ITC could have been available on the complete amount.
I am discussing from client point of view. So the how the bank has now to discuss from the bank point of view. So how the bank has issued the credit note for the taxable amount, but they have not reversed the tax portion. So what kind of law they have applied in bank case? So the bank has reversed the taxable value. It means they have not reduced their tax liability. So if they have not reversed the tax liability and they have paid the tax, so now just they are passing on financial benefit to the taxpayer to retain the customer to provide the benefit. In such a case, what will be the solution? So why bank is allowing the same? Why bank has not reversed their tax liabilities? From bank point of view, they are saying that we are not reversing the services, we are just passing on the benefit. That's why they have not their reduced their tax liabilities. But if it is related to particular invoice, like if there are 10 or 20 invoices and the amount of reversal or credit note is not an invoice specific, is a wholesome amount, then it can be say that it is a kind of financial credit note. But if the taxable value is just equal to the amount that has been charged, then there will be the Mohit point will be applicable, that when the service has already been reversed, then the ITC will not be available and you don't have to take the credit, I think.
Uh, Moving on to the next query, if anyone has.
I have another query where a company which has transferred some of its stock for a trial production. Okay. The end results is that they didn't even sold the scrap as a scrap in the books. Now the question is the stock which has been transferred for trial production is eligible for input tax credit. They availed the credit and the stock has been used for a trial version. And there was no final product came out. The company has neither sold a final product nor as a scrap. So is there any restriction in claiming the credit?
I don't think there is any restriction, because we have a lot of judgment saying that once a material is put into production, that is, it can be said that that material is used in business. So only condition in Section 16 is that it should be used in the course of furtherance of business. So if a material is put into production, I believe the ITC should be available.
But they are arguing that it is not eligible because what happened to the scrap, the residual which you would have at least sold it. So there is no output tax is there, so therefore they are restricting the credit.
Yep. In GST law, there is no principle which says that you have to pay
Yes.
tax on output to claim ITC. We have to go by the conditions which are mentioned in Section 16.
Okay.
Section 16 only says that the input service or goods should be in the course of furtherance of business. So
Okay.
as long as that condition is satisfied, even if there is no direct output related to that particular input, I believe the ITC should be available.
The problem is that the stock whatever they transferred is not in a small quantity, so it's in a high value. So that's the reason they are objecting to it.
But the principle will remain same, whether it is the
Remains
transaction
as
is of 10
yes,
rupees or 10 crore rupees, the legal
yeah,
principles will remain
correct.
same.
Got it, got it.
Any views, Gaurav bhai?
Yeah, same point of view. There is no condition that if you have received output, then only you will allow the input. So whether we have put in the manufacturing, whether we have received output or not, it doesn't mean that we will not get the credit.
Okay, thank you.
Any other query?
The one more query is this RCM payment. Is there any the detailed self invoice have to be declared in GSTR1?
In document series has to be reported in table 12 or
Documents we are
13.
reporting, do we need to also declare it as a B2B? Nothing.
No, no. GSTR1 is only for declaring your outward supplies, not your inward
Oh,
supplies.
Yes.
okay, fine.
Okay, so if any other participant have any other query, they can ask. Otherwise, we'll move on to the queries we have received in our Google Sheet. Gaurav, I think there is no other questions by the participants, so we can discuss the queries we have received in the Google Sheet.
Yes. So the first query that has been received, like it is related to the appeal and the appellate tribunal things that the taxpayer has received the order and they have not filed any appeal yet, and the order has been issued 2 year back. So they have not filed any appeal. And now since GST 80 has become operational, so they have the question that whether they can directly move to the appellate tribunal or they have to file the appeal before the appellate authority, and once the appellate authority will reject the same, then they will go for the tribunal. So that's the point that has been raised by the taxpayer. So the question was that.
So, see, I believe that even GST appellate tribunal is constituted under CDST Act. So, it is a established proposition that when a tribunal is made under a statute, then it cannot override the statute. So, GST tribunal also has to go by the provisions of CGST Act only. So, if our appeal is time barred, it cannot be over. That time limitation cannot be waived by GST tribunal as well. So I think in that case, the only option is to go to writ petition, and in writ petition, High Court can exercise its discretionary power under Article 226. But then the taxpayer should have very valid grounds to substantiate why he did not file the appeal within 2 years. Like we have various judgment of various high courts, most notably by Allahabad High Court, wherein they have held that when in a lot of cases earlier GST portal used to have two different tabs, main notice and additional notices.
Yes.
So even though additional notice was not meant for normal order in originals, but in a lot many cases, department uploaded the normal orders in that additional notice tab, additional notice and order tab when it was not supposed to do.
Yeah.
That was against the instruction they had given on GST portal itself. So in those kind of cases, the High Court, Allahabad High Court, as well as many other high courts have given relief, saying that the order itself was not communicated.
Yes.
So I think that is a very good ground because arguing that you give me relief from time limitation is going to be a very difficult ground.
Yeah.
But we can maybe try to develop some alternate ground, especially regarding communication, because recently Allahabad High Court also gave a judgment, which we discussed in our last session, that communication versus service is also a different thing. So
Yeah.
even if a portal order is uploaded on GST portal, but taxpayer has not seen that order, so that will not be treated as service of order. That can be treated as communication as per section 168, but that will not be treated as service of order, and time limitation will only start from service of order. So I think that kind of grounds can be developed, and if those grounds are not available, then also you have to go to High Court to claim a relief.
Yes. So I think Manish Garg has raised the hand.
Yes, Manish ji.
Sir, my question is whether we can claim ITC on solar panels used in factory premises for the furtherance of business.
Yes, sir. And there is.
The department is saying that you are because we have a on grid type of solar panel where we sometimes we use the electricity in our consumption. Sometimes it is sold to, it is supplied to the PSPCL department, and then their electricity is also imported into our premises. So they are saying that your supply is exempt supply and you cannot claim ITC.
So first of all, see, to the extent you are using that electricity in your own premises, for that you are completely eligible. There is no dispute because that portion is used in the course of your own business. Regarding the portion wherein you are supplying the electricity to your government departments. So in most of the states, they have this reciprocal arrangement that if you have given, let's say, 100 units to government department, you are entitled to get back 100 units from them. And if they are not able to give you 100 units, then there is a rate fixed that for the surplus electricity supplied by you to them, they will pay you a certain amount. So in case you have sold surplus electricity, you have not gotten
Well,
back.
it is not sold. It is not sold for any price consideration. It is just a set off of their solar system that sometime at night we we are supplying, or in the daytime when the electricity is not consumed much, then it is automatically transferred to the PSPCL, electricity board. Then when we consume extra units, then it is taken back from PSPCL. At the month end, the accounts are settled, or in the invoice from the PSPCL, they set off import and export units and carry forward the balance units.
So then there is no exempt supply. See, exempt supply, because that is done because electricity cannot be stored. So if you have any extra electricity generated, you have to give it to someone. So they are also not storing the electricity. They use the electricity for their purposes, and then they give the equivalent amount of electricity back whenever you need it.
Yes,
But
sir.
essentially, that is, in a way, that is storage of electricity. That you had some excess electricity which you gave to someone, and he supplied the same quantity of electricity back to you when you needed it. So there is no supply at all.
Okay.
Where is the question of exempt supply in this case? Exempt supply will only come into picture when they are paying you some amount. You have given
Okay.
electricity to them, and they have paid you some amount for that electricity. Only then the question of exempt supply will come into picture.
Okay, sir. Thank you, sir.
Any other query?
May I ask one more query?
Yes, ma'am.
Yeah. See, I have a client where this is again the renting of property. They see for let's say that the client has got some 10 units of commercial property, of which 8 has been let out, and the 2 is vacant. That it is not been let out, but it is vacant. But for the 2 properties, as a landowner, they have to pay the maintenance to the association. On that maintenance, there is a credit, input tax credit is there. Now we received one notice and in which they say that this ITC is not eligible. So is it right or what?
Gaurav, you would like to take it up?
I don't think that there is any restriction on taking ITC, since if your output tax, whenever you sell that property, then you have to pay the tax. So you can, like, if you are purchasing, take a simple example, if you are purchasing any goods and we are not selling it, we will sell it after 1 year or after 6 months. So whether the department can say that for the particular tax period you have not sold the goods, that we will not allow you to ITC. So it is not a right ground. You will be allowed the ITC because once you sell the property, at that time you will utilize it.
No, it is not the selling, it is only renting of a property because it's all completed properties
And
actually.
if you rent that property, that vacant property, at that time you have to pay. At that time you have to pay tax on the rent amount. So you
Yes,
can utilize it.
but there is a time gap between the purchase of some of the properties were vacant for quite a longer period because of the rental or they didn't get a tenant for some reasons.
So that time gap perhaps over the year, you are saying.
Yes, more than a year, yes.
In that case, department may ask that when you are not supplying any services, so how you will.
Correct.
Uh, I think, again, going back to the argument we discussed a few minutes ago, that as per Section 16, you can avail ITC when the input is in course of your business. There is no doubt that the maintenance amount which you are paying, that is in course of your business, because business is uncertain. So in your typical business model, when you have taken some units or rent and you are further subletting them, sub-renting them, then there is always going to be a risk that you might not be able to sublet those units. So that is a business risk, which is a conscious decision of the businessman. So whatever extra maintenance that businessman is paying because he is not able to rent out those some 2 units out of those 10 units, that is a
Yeah,
conscious risk taken by the businessman. But that expense remains to be a business expense. That is
correct,
also proved by the fact that that will be recorded in the profit and loss of that business. That will also be allowed under Income Tax Act, because Income Tax Act
correct,
also allows only business expenditure
correct.
as per Section 37. So if that is a business expenditure, ITC should be allowed.
Yes.
GST law nowhere says that IT's any expense they have to be directly correlated to output supply.
Yeah,
Section 16 says it has to be in the course of furtherance of business. Section 17 says that if that input service is related to any exempt supply or non-business purposes, then ITC has to be reversed. It
correct.
does not say that every expense has to be related to directly related to a
Yeah.
taxable supply.
Okay.
So in my view, ITC should be available.
Yes.
Yeah. Okay. Thank you.
So any other query?
So we have one query. So
Uh,
answer that query. We have received one query regarding the refund. So the query is that there is a taxpayer who is in the business of the manufacturing of shoes, and it means footwear sector. And in footwear sector, the output tax is applicable 5% output tax rate, and inputs they receive 12%, 18%, and 5%, three kind of tax rate. Now the question they have raised that since the taxpayers fall under the category of the IDS inverted duty structure, they are claiming refund for the higher rate of input tax credit that has been accumulated. Now the department has raised query in their case that in the case of the manufacturing there are some scrap, and that scrap is also taxable at the rate of 5%. So the department has raised the concern that these scrap is a separate thing. IDS will not be applicable for the scrap portion. If it will be applicable only for the product that you have sold, that for the shoes, For the scrap, we won't allow you the benefit of the refund. So, what are your point of view on that particular case? So, whether scrap will be included for the calculating the refund or not? Department has clearly disallowed and issued the order against the taxpayer.
So, see, in my view, uh, uh, first of all, one thing we have to be very clear about is when we see the formula under Rule 89.5, it says that net ITC into inverted duty turnover upon total turnover minus tax payable on inverted duty turnover. So, in a lot of these kind of cases, what department does is it will reduce from the numerator. So
Yes.
let's say I have net ITC of 100 rupees, 400 rupees is my normal 5% turnover, 50 rupees is my this scrap turnover. So and so what department will do is they will say 100 rupees into 400 by 450. They will reduce that 50 rupees from the numerator but not from the denominator. And then again,
That has
when they will subtract tax payable on inverted duty, there also they will take 450. So, in my view, so this is the worst case scenario that even if I take the worst possible interpretation, if you want to set aside that 50 rupees, that should be set aside from everywhere.
yeah.
So it should be 100 into 400 oblique 400 minus 5% into 400. So that is one thing that if you want to remove, it should be removed from everywhere. So financially, if you see, that will offset most of the difference because this inverted duty again is a very calculated. You have to go into calculations to understand the real impact. Legally, if you ask, see, scrap is also outward supply. Invert. Legally, there should not be any difference between your normal supplies and scrap supply. Both are outward supply. Both are leviable to GST. Both qualify as a supply under Section 7. So, and Rule 89.5 is a very, very strict formula. It is
Yeah.
also a settled principle that when law has given you a way to calculate something, you have to calculate that in that way only. You cannot import your own logics. So when
Yeah.
89.5 has a formula, because section 54 is only a eligibility criteria. 54.3 only says that is only a eligibility section. Once I have qualified to be eligible to get a refund for inverted duty structure as per section 54.3, then 54.3 goes out from the picture. Then I only have to refer to 89.5. 89.5 gives me a formula which I have to follow. And as per that formula, that 400 and that 50 rupees are one and the same. They have the same nature. There is no difference, legally speaking. So, in my view, that complete turnover should be taken.
Even how department could decide that the particular 12% or 18% ITC that has been received for the manufacturing of the shoes has not been utilized for the scrap.
Yes.
It
So that complete ITC is related to manufacturing.
yes,
So in my view, even if they're reducing the turnover, complete ITC has to be taken.
yes. So it should be allowed, and it is totally baseless kind of thing that when your scrap is 5% rate and we will not allow it is available only for the main product, not for the scrap sale or the byproduct. So
Agreed.
yes, that's the
So I
it.
think we have received some more query as well. So Gaurav, I'll just ask one more query because I think it's already 1:03. So I'll just ask one query and then we can conclude the session. So in this query, what the participant is asking is in case of Rule 86B. So a taxpayer did not comply with Rule 86B. Maybe 2 years back, 3 years back, when that rule was introduced. Now the department has come and said that this 1% liability you were supposed to pay using your electronic cash ledger, but you paid it through electronic credit ledger only. So you pay that amount in cash now.
Okay.
So, and taxpayer accepts the demand, it pays that amount through electronic cash ledger using DRC3.
Okay.
So now what happens to that 1% amount which was paid through electronic credit ledger? Because ultimately taxpayer was required to pay 100 rupees only, but taxpayer has paid 101 rupees. 100 rupees using ITC at the time of original 3B filing and 1 rupee now through DRC3. So, whether the taxpayer can get a refund of the amount paid earlier, and whether that refund will be in cash, whether that will be through in the electronic credit ledger.
So the point is that if the department is asking right now for the back period, So to it's the in that case it will, of course it will be exceeding the actual tax liability that we have to pay, and it will automatically generate the situation where we have paid excess tax from our supply. If we have made supply for the 100 and the tax was liability was there 18 rupees, we have only utilized the ITC for that 18 rupees. Now department is asking that you have to pay 1%, like 1% of 18 or 1 rupees or 2 rupees, whatever amount we have paid. In that case, it is a case of the excess payment of tax, and how it will be very crucial that how department will take that thing, the whether they will allow. If from my point of view, yeah, it's case of the excess payment of tax, and we will proceed for the refund application. Now the point will arise that how refund will be made available. So since we have paid mostly, we have goes for the refund of the tax paid through ITC, not for the cash payment, because cash payment was mandatory as per law. So we have made excess payment through ITC. If department will accept it, then they will pass the refund through ITC only, from my point of view. Because they
So the
will
time limit will apply for this case actually 2 years period.
2 year period from we have paid excess payment of tax on the particular date of order when the 86B order has been arrived.
But we are going to claim a refund of what has been paid earlier, right?
Yes.
Yes, so I think in that case, even for Section 77, they have provided that when you have paid CNS by mistake and you subsequently you pay IGST. So that 2 years period will be calculated from the date of payment of IGST, from the date of
Oh,
correct payment. I think similar logic we can apply here also, because till the time department did not come to me, I did not know.
yes.
Okay.
So how can I apply refund? So refund will only come after I have made that payment through DRC3. So 2 years should also be calculated from that period only.
Okay.
I think Gaurav, we have taken up all the queries. Some queries are still remaining, but I think since we have already crossed the time limit, rest queries we can take up in our next session. So thank you everyone for attending today's session, and thank you Gaurav bhai for giving so much time and efforts. And we hope to see you all soon. So next Sunday again at same time 12 p.m. we'll have the session. So thank you everyone.
Thank you. Thank you.
Thank you so much.